Show with Cavmont. And in the studio, we are joined by Ingrid and Nathan. Ingrid, good morning.
Good morning. How are you?
Good. How are you? Nathan,
I'm
how
fine.
are you?
Good. How you doing?
Good, thank you. We get straight into today's business. Considering that we have two guests in the studio, it simply just means that we have a lot of nice and important things to actually talk about. I'm going to begin with you, Nathan. All right, you're not a new face to, Facebook and obviously Cavmont Smart Money Show. You've been here before. And so for starters, we want to look at, the kwacha. Okay. And everybody knows that the kwacha, was a little shaky and all that, and people were complaining and stuff like that. How has the kwacha fared against the dollar over the past week?
All right, thanks very much. So over the past week, we saw the kwacha trade flat. So in this case, we did not see much movement. So we saw it trade in the levels of 12.85 to about 13. So there was not much volatility. Until Friday in the afternoon when we saw the kwacha push up, but otherwise it was pretty much flat. So what happened there was later in the day we saw kwacha push up to about 13, probably because of some demand that we saw in the market. Probably we had some maybe demand from the energy sector or from the mines or something like that. But pretty much it was pretty flat week. Yeah.
Okay. All right. Now, copper prices have been steady trading above, $6,000 threshold per ton. But we still are not seeing, the kwacha appreciating. Why is that so?
Okay, that's true. Generally, talking about the copper, what we expect, seeing that Zambia's major export is copper, right? So what we expect is to see more value for every increase in the copper price. But, our markets are not exactly driven by sentiment, but driven by more of demand and supply. And also we have other factors that are affecting the kwacha, such as the general increase in the dollar. So it has increased over most currencies on the market. So we've had we've seen the Treasury in the US, the US Fed, increase their interest rates. So they've been running some sort of tightening policy. So that has affected our kwacha. So for us to see some appreciation in the kwacha, we should see maybe some sort of investments. So let's see maybe foreign investors come in on the market to invest in products such as treasury bills, or we should see them invest in products such as bonds, our local bonds, so that we can have an influx of foreign currency coming on the market to, boost our kwacha. So when we see an influx of foreign currency coming on the market, what will happen is we'll see a demand for kwacha, because for you to buy those bonds and treasury bills, what happens is Bank of Zambia will only allow those products to be purchased in kwacha. So we should be able to see an appreciation. So we need to see such type of supply on the market coming from the foreign sector. Also, maybe if we had an increase in our export products, so if we had an increase in the export of copper, so we talked about the copper prices going up. So if copper prices go up, but we do not have an increase in the export of copper, there's nothing happening really there. So what needs to happen is we should have an increased exports in copper or other commodities such as maize, so that we can have more currency flowing onto the market. But otherwise, if all things remain equal, we should be able to see the kwacha trade as is. Also, back to the previous question that you asked me, we were talking about the performance of the kwacha. So most corporate sellers anticipated some sort of appreciation in the kwacha because we had some mid-month taxes. So based on that, they thought we could have a stronger kwacha. But you see, on the rationale of taxes, so maybe to those who do not understand, when taxes kick in, what happens is for all the corporates that are supposed to pay their taxes, they convert their whatever reserves they have in foreign currency to kwacha, because taxes are paid in kwacha. So they convert whatever currencies they have to kwacha in order to meet their tax obligations. So the effect is that when they convert, they're bringing in more foreign currency. So some corporates will have euro, some corporates will have dollar, some corporates will have pound. But in whichever case, what they're doing is pushing, bringing foreign currency on the market. So what happens is we have supply, and therefore creating demand for the kwacha, right, so they can settle their obligations with ZRA, pretty much. So that's why they expected the kwacha to push up. But back to the copper. So if we see maybe in the long run, if we see sustained increase in copper prices, in the long run we might see an appreciated kwacha. But where we are right now, we just are hoping for some sort of supply on the market for us to see the kwacha gain ground, pretty much.
Right.
Yeah.
Now, would like to find out a little bit more about other markets and the performance of their currencies.
Other markets. Okay, so we have seen the euro. It has been quite stable. The pound has come under pressure based on, we've all been seeing this Brexit going on for, So Theresa May is trying to push out her petition with the Chamber of Commons? Yes. So she's trying to push out her petition, which, is being hit back and forth. So the pound, because of the uncertainty, is coming under pressure. But the more significant one is the rand. So we are seeing the rand trade. We've seen the rand trade between 14.25 and 14.4. It has had its gains and losses over the past week, but it's quite impressive that even what has been going on in South Africa as of this past week, the general elections. I'm sure you're aware that there's been general elections in South Africa. The rand has still maintained its levels, and we expect it to continue trading within those levels, in this coming week. So we expect it to still stay strong, because I think it hasn't really been shaken. We still see trading within the levels of 14.4 to about 14.44, somewhere there, pretty much.
All right. Speaking of this weekend, the week we're in, we've talked about how the kwacha fared last week, and why that is so. But would like to know how the kwacha would perform this week. How do you think it would fare during the course of the week?
How do we think it would fare? Well, the kwacha is is a tough one. Pretty much.
Oh no.
The kwacha is a tough one, but it all comes back to what I said before. It's all based on demand and supply. So if we can have some sort of demand or some sort of supply on the market, we'll see an appreciation in the kwacha. So we expect it to trade flat, because we do not have any major events. So in this case, I'm talking about we're not seeing any taxes being paid this coming week. We're not expecting any major inflows on the market. So we expect it to still trade within the levels of, let's put it between 12.8 and 13 this coming week. Unless we just, for some reason saw some sharp supply on the market, maybe if the mines came in and brought some sort of supply on the market, that's when we can see the kwacha appreciate. Otherwise, pretty much should trade around those levels.
Before we go on to what you have for us,
Yes.
Ingrid, anything you'd like to add on to what Nathan was talking about?
I actually have a question for Nathan.
Please.
I don't work in Treasury, where you're from, so I don't understand the language. And I'm thinking maybe there's somebody out there as well who might not know what flat trading means.
Okay.
So could you just tell us what you mean when you say the kwacha traded flat? We expect it to trade flat this week. What are you talking about?
Okay, so trading flat, basically, there will be no much movement, so we expect it to trade within a certain level. So
Okay.
so if I say it's going to trade maybe at a level of 12.9, we don't expect it to trade far off that threshold. So we should trade between 12.9, 12.95, 12.8, somewhere there.
Okay.
So it basically means there will be no much movement in the market.
Okay.
That's what trading flat means.
Okay.
Yes.
And then also I noticed, or rather I remember you said earlier that the rand is at
14.4.
Yes. Is that 14.4 for a kwacha?
Yes, please. So 14.4 for every dollar. My apologies. Yes.
Okay,
So
right.
it's trading at 14.4 per dollar.
Per
that
US
was the
dollar.
closing as per Friday.
Okay.
Yes, pretty
okay.
much.
All right. So I
Yeah.
just thought I should ask because I needed clarity. Thank you so much.
Are you clear?
I'm very clear.
You happy?
I'm happy. My side gig, I've talked about my side gig before. I make payment in rands.
Okay.
So already I was like, oh my goodness, I'm about to lose customers because I'm going to have to price my goods a little bit higher than they are right now.
That
But-
explains the concern.
Yes, the concern about the rand especially.
Okay, so we
Because,
get
yeah.
straight into what you're sharing with us today. So somebody is testifying how that the three things they did
Yes.
made them a wealth management class.
Yes,
Okay.
yeah.
So I don't know if you are among the people that
have done
that
something?
would testify to this?
I haven't taken a wealth management class.
Right.
However, I think being on the Smart Money Show actually qualifies for being a wealth management class.
Okay, so after this, Nick now will qualify.
You will definitely,
qualify.
Definitely,
and everybody listening in.
Yes, is now a qualified person. I could probably even come and certify you.
I need that certificate.
Yes, because we learn so many things to do with wealth and managing of our income and our wealth and things like that. So this is a very good thing. So anyway, but for today, we've got somebody called Amara. Amara shared with us what happened to her after university. Mm-hmm. So she says that after her 4th year of university, she decided to take a wealth management course in the hopes of preparing herself for adulthood after graduation. Mm-hmm. We've talked before about making plans for when you've finished school, you're starting your first job, and at some point you're thinking about buying a house, buying a home, buying a car, you get married, etc., etc. So you're planning for all those things. Mm. So what she decided to do is okay, I'm going to go into a financial literacy class. I need to know something about financial literacy. And of course, we know that financial literacy is something that Bank of Zambia is very, very big about. And of course, Cavmont Bank participates in financial literacy weeks because we are part of, of the financial platform. So we want to make sure that everybody gains that. Okay. So what Amara did, when she started, she says, look, I barely knew the difference between a savings account or between two types of savings account. There's a transactional savings account, and there's a savings account for saving, the one that you do not touch. Mm-hmm. And then there's one that, okay, maybe because you want to be earning a little bit of interest while you're saving, one of the accounts that Cavmont Bank has, whose name, as usual, always runs away from me when I want to talk about it. But, in that one, it works as a, it works as a current account, but it's a savings account, okay? So that one is a transactional savings account. Then you can have something like the Imbasel account, which you can use actually as an individual to save and not touch at all. And then for your children, you can also have the Imiti Equal account. That one you will also not touch. You'll just be depositing every month. And then maybe once in a long while, you will make a withdrawal because you want to pay for your children's school fees. So after she'd taken the class and improved her financial literacy, there were 3 things that she did to help her reach her financial goals. And the first thing was to outline her lifetime major savings goals. Okay, we've talked about setting goals before. Yeah. Okay, so here for her she needed to understand what she needed to save annually, and she had to know what her financial goals were. So what this included, the financial goals, for example, were that she needed to buy a house in the town that she lived. She needed to buy a car at some point. She was planning to get married, so she needed to save for her wedding. And obviously, after marriage, children do come along, and so she needed to save for her children's school fees as well. So those were the things that she was thinking about, and even beyond that, she also needed to save for her retirement. Okay, so she had all those things. So these are the things I need to save for. So after she had outlined these major lifetime milestones, now she put these in a spreadsheet, and then determined approximately how much should be saving every month towards those things. So towards my future house, my down payment maybe, because I plan to get a mortgage, I need to save for a down payment. And then my wedding, my vehicle, my, all those things in a spreadsheet. So I would imagine that on one page she would have house, children, wedding, etc., etc. And then every month she looks at her income that she's getting in every month, and then she says, how much can I afford to put away? I think last time we said 30%, right? Last week we said 30% of your income you should be saving.
So 15.
For some people, but we started with 30%. Kafula, you're already reducing it.
We said 15.
I see are going to be a problem. So anyway, so in that 30%, you can now make the divisions, okay? Because, I mean, you're probably, 22, 23 when you finish university, and you're going to retire maybe at 65.
Right.
So you can begin, 30% with the 5 that I've identified. Maybe I divide that 30% by 5, which will give me like 6% for every item.
Right.
And that you're putting into those things. That's number 1. Number 2, she projected her yearly expenses, okay? So after seeing how much she needed to save each year to reach her financial goals, she then had to think back and say, are these achievable? Okay, Twambo has talked before about SMART goals,
Right.
okay? And one of the things there is whatever you're setting up as a goal has to be achievable.
Right.
If you set a goal for yourself and it is not achievable, you're setting yourself for failure. And you're going to fail in everything, because when you fail in a small thing, you become discouraged and you say, let me just give up, and and then that's how it goes. So she had to make sure that whatever she was doing was achievable. And then how did she do that? So she used her current expenses as a baseline. Okay, to determine so this is how I live. So in there I put things like clothing, groceries, entertainment, my rentals, etc., etc., and then looked at her income and then say, okay, so looking at what I have now, this is my base. Can I manage to save for what I've planned? What I've decided I'm going to be putting away, is it practical? Is it not? Am I going to die today trying to save for 65 years from today? So she had to look at all of that to make sure that that was going to work. So what she did then was outline and project her future expenses, and then that helped her to recognize where she needed to cut. We've talked before about when you outline everything that you've got a budget, where you're supposed to make a cut in your budget and where you're not supposed to make the cut, and that kind of thing. So all of that was planned out. So when she looked at all of those things together, it gave her a nice yearly budget that she could adjust as she saw fit. So if she had an issue or a challenge in the middle of the year, she knows that, okay, this is what I've projected. Maybe I can take some money off of this item and put it towards this challenge. If she's been saving in her emergency fund, it's running, and then she has a funeral, she could take that money out of the emergency fund and put it towards the funeral, but continue saving at the same time. And then the last thing that she did was begin making her monthly payments of $25 into her transactional savings account. So she put that not into her transactional savings account, but into the other account that she doesn't touch. So for us, I would say our Imbasela account. So instead of putting it into the account where she's going to be transacting and making her payments and her bills, she took $25 or 15% of whatever figure she had, or 30% of whatever amount she had. Yeah, I see you're making your eyes small.
Or 10% or 15%.
No, let's say 30, Kafula.
Okay.
Yes.
30%.
Yeah. So she was putting that away every month, and that was helping her her pot, quote unquote pot, to grow. So those are the 3 things that she had to do. So number 1, she had to outline her lifetime major savings goals. Number 2, project her yearly expenses, and number 3, actually begin to make the monthly payments. Because there's no point in going through number 1, number 2, and then you don't take the first step, the third step rather. The third step is to actually begin to make the savings, and that is what is going to help you to make your goals become achievable. And then for her, she finally says her goals were achievable, because she had planned and gone through the steps, and everything was making sense. So after that introductory course on personal finances, she now knows that she can even handle bigger things. So obviously, as her income grows, as she begins to go up in life, the 30% might turn to 40% or 35%, or if it's 15%, it might go up to 20%. And by the time she hits retirement, she will have a nice nest which has been put away. And in the meantime, she's had her wedding, which she saved for. She's bought her home, she's bought her vehicle, and she's paying her children's tuition fees.
All right.
Yeah.
Interesting. I think I've learned something when it comes to projecting.
Yes, for
the
our
yearly
child,
expenses.
for our child.
For our child.
Well, I think one thing that I've also just picked in this that we've learnt about is the fact that we need to set realistic goals.
Yes.
Let's not dream.
Let's not dream big things.
I want to travel the world or I want to buy this, big house and stuff like that, but then you're saving a 10 kwacha.
Exactly.
I mean,
exactly.
when are you going to have the money to
So
actually,
at the end of the day, they have to be the goals have to be realistic.
Yes.
They have to be realistic and achievable.
Right.
Yes.
Okay, so with that said, time is running real fast, and so we just quickly allow you to, we'll start with Nathan, give us your closing remarks, and after you, Ingrid, will be able to tell us where people can actually
find us.
You at Cavmont, and yeah.
Okay, so last time I was here, we talked about different products that we would offer from the treasury aspect.
Right.
So I would encourage most players, in this case, buyers and sellers of foreign exchange and other financial products to, come through, call through, so we can, be able to transact and give you very, very favorable rates in the market, pretty much.
All right.
Okay.
What line can they call you on, Nathan?
Exactly.
So they can call us on 0211 360098.
All right.
Yes.
And you've just talked about, those, products that people can come and find out about, but then we have people that didn't listen in then, so maybe just...
Okay, so last time we talked about products such as, the spot foreign exchange. You trade on a spot deal, so that's just buying foreign exchange outright. So we also talked about forwards, we talked about FX swaps. What else did we talk? We talked about term deposits as well.
Right.
So yeah, if you're in the market searching for such products, we are always available to serve you.
Right.
Indeed.
Ingrid.
Okay, very quickly, I'm just going to tell you, you can find us on 33. You can call us on 3333 from your MTN and Airtel lines. You can also call us on 0800 100 3333 from your Zamtel line. And of course, you can write to us at customerservice@cavmont.com.zm, and you can find us on Facebook, and you can also find us on Twitter and YouTube as well.
All right. Nathan and Ingrid, thank you so much for coming through.
Thank you.
Appreciate it.